Do you think Tesla is still able to achieve more than 20% margins on their cars at these new pricing levels once Berlin and Austin are fully ramped? Do you think that's still a realistic expectation?
At every configuration, no.
Hmm.
Combined, yes.
Okay. Yeah.
So they're making way more money on a Model S Plaid than a low-end Model 3. So think about it. The motors are the same, the inverters are the same. There's three instead of two. The battery is slightly larger, different cells, and the body is aluminum, which is more expensive. I'm talking about the Model S Plaid.
Yep.
Slightly more features, slightly larger vehicle, which drives cost, but is it 115? So the difference between 43, or let's say 55,
Hmm.
and 115, because I think the Model S Plaid dropped from 135 to 115. Is that correct?
I think it's 94 starting now.
For the Model S
Yeah.
Plaid, Model
Oh,
S.
the Plaid's like 110, something like that. I can look it up real quick, but 115. You're correct.
Yeah.
Yeah.
So the margins on the Halo cars, not Halo cars, the more expensive cars, the X and the S, are going to be much higher, but the volumes are lower, down
Right.
in the 10, 15,000 range. There could be other peculiarities that make them more difficult to manufacture, particularly the body construction. The Model X, the doors drive a ton of cost compared to regular doors. So this is not uncommon in a typical automotive company. So look at trucks or SUVs. So yes, I don't drive an EV. I know. I bought a large Yukon. It was $89,000, and I got the supplier discount, which anyone in Michigan gets, supplier discount if you know anyone. So I paid like 85 grand for it. The difference in price from that and like the Equinox or the Terrain is it's like $50,000 more, because I think they're like 40 grand or 35 grand. But does it cost them an additional 25,000 US dollars in cost to make the Yukon? No. When a car grows in size, the material cost is not the largest driving factor, and the manufacturing cost is not the largest driving factor. Margins are astronomically high on large SUVs and trucks for like Ford and GM. They just are. And that's why when these price cuts happen, people are like, oh my God, price cuts. Because they lack the traditional dealership network, it's more structured and I think more shocking. But how many times during tough times in 08, 09, 2010, 11, 12, was there cash on the hood offers at dealerships? Think about it.
Mm.
$10,000 off, $15,000 off, leasing options. So dealerships had huge wiggle room to work to erode into those massive margins to move metal. And it was more case by case basis what the dealership networks would do for all sorts of sales. You've seen it, no money down, special financing, crazy deals where even though the MSRP for some trucks would be 65, 75, people were paying $20,000 less than MSRP out the door when OEMs were trying to move, particularly trucks and SUVs, just so they could keep the plants open. I don't think we're at that level with Tesla, but I do sense the urgency to keep the plants busy and to move the product. And I think the more adoption you have of people in EVs, it will sustain the momentum that they already have. And what they sell 1.35 million vehicles last year globally, something
Yeah,
like
that's
that.
1.31, I think it was. Yeah.
1.31.
Yeah.
I think Sandy predicted 1.4 last
Yeah.
year, a year and a half ago. What do you think they're going to make this year? 2 million?
So, yeah, so one of the things that I did is I sat down and I'm like, okay, my thesis is that if Tesla's lowering pricing, it means that they are looking to, call it move metal. So like just reach capacity. I don't see why else you would want to lower price, because you're cranking out cars, and for whatever reason dynamic there is, people are not buying at that price, so you lower the price so more people can buy. And so what does capacity mean for Tesla? If I look at their Q4 production numbers, it's about 440,000 cars they exited the quarter in. And in their investor deck, they say that they have about 2 million total production built out at their factories. So to me, that sounds like 2 million cars in 2023, as long as there is a buyer for the pricing that they set. And if you look at the sort of last week's noise and craziness that has happened and since they lowered the prices, it seems like the inventory is just clearing quite quickly. Now the question becomes: is it going to be sustainable through the end of the year to be able to reach a price point where people buy? But where I'm very encouraged from my standpoint for that EV adoption, and say for Tesla's long term success, is that even after these price cuts and the ramp of Austin and Berlin, and the fact that these, based on your guidance, which you've given excellent guidance before, so I have no reason why that's not true. Plus, sort of my own math says that their net margin after selling through all their cars at scale should be somewhere above 20% or around 20%, which implies that if they aren't able to hit 2 million car production for whatever reason at current prices, you still got a lot of room. You still have technically 20% margin to give up if you wanted to run a break even, since your company doesn't have any debt. Now, from a standpoint of a shareholder, you probably don't like that answer because you're like, well, where did my earnings go? But I'm more afraid for everybody else if that were to happen. Because if Tesla says, okay, I need to get to full production and I need to crank out 2 million cars per year, and 20% margin ain't going to get me there. I need 10% margin. That implies another 10% price drop somewhere, or probably more, because your economies of scale will kick in at some point as well. And you also assume if the economy has slowed down to a point where you have to lower the prices that much, the supply chain should be in deflation as well, and you'll be able to strike new deals with your suppliers and new contracts at a lower price for higher volume, right? So there's a lot of variables that kick into this. And all of it just seems like the company with the most pricing power wins. The one that has all the margins to be able to sell through wins. The one that can pass through these directly to the consumer without getting gouged at the dealership wins. The one that has the least amount of friction and barriers to get the car wins. The one that can upgrade their software and charge extra money for those cars wins, right? There's all these variables that are pro Tesla in this environment versus legacy. So I might be naive in thinking that 2 million is the bottom for 2023, to be completely honest, because I think those price decreases sent the message that said, we're just going to do it. Like, we don't care, we're going to do it. And like we were talking before, Eric and I, a person who just bought a Tesla before this price decreases are probably super pissed, and they should be, because that kind of sucks. But if you think about the long-term implications of what this means for Tesla, its growth, the adoption of EVs, and I think just as importantly, what this means to every automaker trying to compete in this landscape, all of a sudden you have the newcomer dictating what the pricing should be in the market for a vehicle. And that's something that we've never been in before. So that's how I view it. I don't know if you have any thoughts or comments around that, but that's sort of where I'm coming from.
Yeah. My mother-in-law bought a Tesla. She bought a long range Model Y with white interior.
Nice.
She loves it. And she got it about 8 or 9 months ago. And I think when she ordered it at 55,000. And then it was right before the aggressive price increases. So it was going up and up. And she felt really good because the price kept increasing. And then when she took delivery, I think it was $5,000 or $6,000 more to order one at the time she took delivery. I think she had to wait 4 or 5 months. It was back when you couldn't get them. And she sent me a text when the price dropped. She was really kind of sad. She's like, because it has an effect on, the residual market, the used car market.
Right.
And I reminded her, I said, hey, I think that's about what you paid. They dropped it all the way back down to what she paid. And then I haven't had a chance to talk to her because I was in Houston this weekend, but I couldn't imagine what it would be like if you just paid $70,000 for a Model Y Performance and now you can get one for 56. That'd be tough. That would be tough. But there's probably tens of thousands of people out there like that. But I think there may also be a component of the pricing limits for the tax credit. I bet were drafted in a way to stiff Tesla. And that was one nuclear option that Elon or Tesla, the people at Tesla, could push just to drop down for the vehicles to qualify. And I love it. It's almost like, I think there's more of a
F you.
oh, you're going to exclude us, by pricing the core of our lineup out. Here we go. We're going to shift it down. So I almost feel like Tesla's like, well, we're going to drop them under. We're going to give, $15,000 savings, and then an additional $7,500 for most people who make under that $300,000 married gross income or 150 single income number.
Yeah.
I think it's kind of a I don't want to say a brilliant move, but I think there was a lot of thought put into that for
Yeah.
the legislation that was put in place for that tax credit.